Hi. Good morning, everybody. Good morning, everybody. Happy Tuesday. Today's February 6th, 2024. Everybody, grab your coffee. There's a lot going on this morning. First story, Chinese government, the national team, aka Chinese government-sponsored enterprises, they're buying up stocks hand over fist to try to stop the stock market crash. And well, for the last day, it's worked. Congratulations over there. We've got the Chinese state-owned enterprises. Besides yesterday, I talked a lot about how they were banning the selling among institutions, taking away the sell button, and well, the stocks will only go up if you don't let people sell. That's not enough. Today, they've got their government financial institutions are actually out there buying up stocks. So it's like the people's stock market. Number go up, numbers aren't allowed to go down. And, guys, I guess I should say I knock China plenty on this channel. Look, libertarian, Chinese Communist Party, pretty much on the opposite side of the spectrum as me when it comes to the way people should be allowed to live. And so, yeah, I'm going to lob a lot of shade their way because F communism, that's why. But besides that, let's not forget that our guys do this too. All right, we have fancier terms for it. We call them liquidity restoring operations or open market operations or strategic interventions to promote market stability. But our guys do the same crap. We just give money to banks first and then they do it and we act like it's different. What it ultimately is it's powerful people using other people's money to make themselves look better by propping up asset prices. Geez, when you put it that way, shit, we do it all too. We do it every day. Turn everything off, shut it down, I quit. But they do it kind of brazenly in China. The government just outright buying stocks. But we've got here at the New York Fed that supposedly, secretively, whenever the time demands it, they'll just go in and buy up the stock market with printed money out of thin air. But China is doing that hand over fist this morning. Chinese stocks ripping higher yesterday. Now, again, relatively speaking, it was a big one-day move. Also news that Xi Jinping is having a meeting. And I guess in China, people get very excited when Xi Jinping has a meeting because they're in Bloomberg saying, oh, there's a meeting and Xi Jinping's going to be there and they're going to talk about stocks. And so Chinese stock market was up 6% yesterday. Does that make sense? What happens at this meeting? Do they bring donuts? But I digress. So Chinese national team is buying stocks. Xi Jinping's having a meeting. Chinese stocks are ripping higher this morning, or they did last night while we were all sleeping. Also, a story in Bloomberg this morning caught my attention about New York Community Bank, ticker NYCB. You may recall New York Community Bank was in the news last week with, can I call it a mini bank crisis? They kicked off a series of banks from all over the world reporting big problems because of commercial real estate in the United States. New York Community Bank was the first. Their shares are down more than 50% in the last couple of days. Well, the article broke in Bloomberg today that in the weeks ahead of this earnings release, there was a lot of back and forth between regulators and the bank. There was a lot of disagreement. And the word fighting wasn't used, but it kind of made it seem like the bank was fighting with regulators. And notably, the bank's chief risk officer and their chief audit executive both left the company before they reported those earnings. And the bank, that publicly traded bank, never disclosed that. Do you think shareholders in New York Community Bank maybe would have liked to know, or customers would have liked to know, hey, our auditor and our risk officer just quit, like within a close proximity to each other while they were fighting with regulators? Gee, if only there were some indicators that there might have been problems at this bank. But if they don't disclose that information, if they don't tell anybody, well, then how are people supposed to know? And so everybody was caught off guard by what was going on in New York Community Bank. Palantir reported earnings today. Huge blowout earnings beat from Palantir. Their revenues up 20% year over year. It seems whatever they're doing with artificial intelligence and the government and the military is proving to be very lucrative. And I'm sure whatever Palantir and the CIA come up with is going to be just great for the average American. I'm sure it's going to be wonderful. You're just going to love it. Why don't we move on? Also, we've got DocuSign is announcing layoffs, 6% of their workforce. That's a few hundred people are getting cut from the pandemic boom stock, ticker DOCU. New car sales in the United States, total vehicle sales were up for the month of January year over year, but still well below pre-pandemic levels. Foxconn, the big Apple maker, they're saying, yeah, we're reiterating our guidance. Q1 is going to stink just like it did last year. A lot happening in the world today. And the last thing I'm going to address is there's a story going around with NVIDIA. There was an article in the Financial Times yesterday. There was a lot of talk about it on Twitter. We're going to address it briefly at the end of the stream here, and then I will have a video on the subject later today with more to say about that. But pay attention to NVIDIA, guys. There are people, it's not going to get amplified by the mainstream press, but we've got our first few people in the financial press have looked. That's it. All right. For 6 months, I've been trying to get them to just look. All right. Almost all of them ignored it. Some of them laughed at it. Threw plenty of shade my way, whatever. I'm over it. But some are finally looking. Maybe that's enough to get others to look. But the ones that have looked, well, they're saying the same thing I said. More about that at the end of the stream. But with that, why don't we shrink my big melon of a head and let's see what's going on in markets this morning. Guys, don't forget that thumbs up button. It really helps with the YouTube algorithm. And if you're new to the channel, hit that like button, that subscribe button, and that notification bell. Give me all your clicks. They're all mine. Have your coffee with the melon heads every morning, and you'll see this stuff before the mainstream media gives it to you. You'll get it here months earlier. Right now, the S&P 500 is positive for the morning, up about 7 points, 0.14% in green. The Dow is up 10 points, 0.03% higher, basically unchanged. And the NASDAQ is 0.25% higher at up 41 points ahead of the opening bell. We've got a slightly stronger dollar this morning at 104.5. That's up 5 basis points, pretty much unchanged from where we were yesterday morning. The dollar's had a pretty good run these first couple of weeks of 2024. We'll see if that one continues. Yields are finally taking a breather this morning. We had a big move higher in interest rates yesterday, along with that stronger dollar as the market reprices expectations for Fed action in March. Right now, the 30-year Treasury is at 4.347, up a fraction of 1 point. The 10-year is down 1.5 points at 4.151. The 2 years down 1 point, 4.462. And the 1 month at 5.387, down a fraction of 1 point. Looking over at the commodities board, April gold futures, $2,045.95. That's up $3 this morning. March silver futures at $22.42, basically unchanged, up a fraction of a penny. Platinum is up 1%. Palladium unchanged. West Texas Intermediate crude oil, March futures at $73.25. That's up a tick from yesterday, about 47 cents higher, or about 0.65%. So not a lot of movement in commodities this morning. Nothing's really moving this morning. Everything is just kind of in limbo after yesterday, which was a pretty big day for indexes and for interest rates. Now, let's talk about this one here. This is the bigger story this morning. Xi to discuss China stocks with regulators as rescue bets build. Now, let me just pause here for a second, guys, and mention this China story. And I have to take issue with this massive global yawn in the direction of China. All right, China is the world's second largest economy. They're our biggest geopolitical rival, ours being the U.S. Sorry, I'm in the States here, guys. I know there's some non-U.S. people that watch this, but when I say ours, I'm referring to the U.S. Their stock market is down over 40%. Their various indexes, roughly, let's say an average of 40%, their stocks are down in the last year. How is the world just blissfully unaware that this is happening? Now, I realize on this channel, I cover it a lot. And even in the mainstream financial press, every now and then they talk about China. But the average person on the street has no idea that a massive stock market crash has already happened in China, and that it coincides with a housing collapse, and that it coincides with a major collapse in consumer spending, and that there's no way that that's going to stay contained to mainland China. The economies, even though we're trying to do this little economic divorce thing as everybody wants to kill each other all of a sudden, but we're still so hopelessly intertwined. There's just no way this isn't going to affect us here in the States. And the whole world is just ignoring what's happening in China. It really defies belief. But you know what? Number go up, 0 DTE options. Just buy. Don't ask questions. Hand your money over to your bettors and let them invest it for you. I'm sure everything is going to be just fine. That seems to be the message here. Anyways, back to this meeting. Xi to discuss China stocks with regulators as rescue bets build. Authorities are working around the clock on what nobody knows, and Chinese stocks rally across the board with small caps leading. Anticipation is mounting for more forceful Chinese government efforts to end the nation's stock rout, with regulators planning to brief President Xi Jinping on the market as soon as Tuesday. Chinese stocks extended their rebound after Bloomberg reported regulators led by the China Securities Regulatory Commission, or CSRC, plan to update the top leadership on market conditions and the latest policy initiatives, according to people with knowledge of the matter. The CSI benchmark closed 3.5% higher for its best day since late 2022. Small cap equities that have so far borne the brunt of the rout also jumped, with the CSI 1000 up 7%, most since 2008. While it's unclear whether any new support measures will come out of the Xi meeting, traders are hoping this time will be different. And guys, that is the second day in a row that I have had to highlight this time will be different in some kind of a hopium article in the mainstream financial press. That is meant to be a knock on wood, don't ever say it kind of thing. This time will be different. And yet they keep saying it over and over again. Apparently this market runs on this time is different. That's the new fuel for this FOMO bull market rally. Good luck with that, guys. A couple other things here. Like, okay, Xi Jinping is having a meeting and we're very excited. We're very hopeful that this could be a great meeting. And so stocks rally. Maybe we wait until after the meeting and what is actually said, and maybe they actually take some actions. Maybe some guys take some notes and write some things down at the meeting, and then we get all excited about it. Or do we just say, nope, they're getting together, and so good things are bound to happen? Me, I don't get so excited when a bunch of communists get together in a room and decide how to steer the direction of a country economically. I don't think that's very good for the average person when that happens, but apparently investors just love it. And the other thing is, we're seeing this a lot, notably in Bloomberg, but also in CNBC, a lot of the mainstream press. You have this, what are they waiting for over in China? When will they open their liquidity bazooka? When will they just print money and flood the market with it? It doesn't really work that way for China. China is not the world reserve currency, so they can't just easily dump new currency into their markets and expect it to not collapse, because when we do it, we're stealing value from other dollars that are held by every country in the world. And so we can dilute our inflation by spreading it out across the whole planet. China doesn't have that. And so, everybody's like, why don't they just make more money out of thin air and give it to people so everybody can be rich? I mean, that's Keynesians. I mean, to a hammer, everything looks like nails, I guess, but it doesn't really work that way for China, at least not in my opinion. And we've also got this one going on this morning. China stocks rally after government fund says it will increase stock buys. There you go. The government directly intervening, buying stocks. China's Central Huijin Investment, a sovereign fund that owns China's state-run banks and other big government-controlled enterprises, promised to expand its purchases of stock index funds to help markets that have been sagging under heavy selling pressure from a property crisis and a slowing economy. The fund periodically steps up buying of shares in big state-owned banks and other companies to counter heavy selling pressure in the Chinese markets. Well, guys, again, we do it too. We call it the plunge protection team. We call it liquidity restoring operations or open market operations. It's the same thing. It's just the government putting their fingers on the scale to try to make things look better to save face. It's fake. It's not organic. It's not real price discovery, and it never works. It may help temporarily calm a panic, but the second you take your finger off the scale, the thing just corrects right back to where it was. Anyways, that's enough this morning to get the Chinese stocks moving. Check out the CSI 1000 index. Big green candle up. Look at that one right there. Up 6.97, almost 7% yesterday on this news of that very hopeful meeting with Xi Jinping. And yay for the national team buying stocks. We got the same thing on the Hang Seng here. This is the Hong Kong Exchange, up 4% yesterday. Again, big green candle higher on this news. China stocks are doing pretty well this morning. We'll see if that one lasts. Now let's talk about this one. New York Community Bank, NYCB's tense talks with Watchdog led to moves that rocked the market. The OCC, or the Office of the Comptroller of the Currency, is said to have ratcheted up pressure before the dividend cut, and the bank's top risk and audit executives recently exited their posts. Recall that New York Community Bank posted a big loss in their most recent earnings. They slashed their dividend by something like 70%. They increased their loan loss provisions by over 900%, setting aside hundreds of millions of dollars for losses in office and multifamily commercial real estate, notably rent-controlled multifamily. And well, it turns out that there was a lot of back and forth between the government, and some very important people at that bank left their jobs amid that back and forth. Mounting pressure from a top U.S. watchdog led to New York Community Bancorp's surprise decision to slash its dividend and stockpile cash in case commercial real estate loans go bad, according to people with direct knowledge of the matter. The drastic financial moves, which triggered a record plunge in the company's stock and dragged down shares across the industry last week, followed behind-the-scenes conversations with officials from the Office of the Comptroller of the Currency, the people said, asking not to be identified, describing the confidential discussions. Ooh, anonymous sources, Jack's favorite. 2 senior executives left their post in the months before the bank unveiled its measures, one of the people said. As of late last year, the company's website no longer showed Chief Risk Officer Nicholas Munson and Chief Audit Executive Megan Belfinger on its leadership page, and the changes weren't publicly reported by the firm at the time. That's freaking huge, guys. At the end of the year, the fact that they didn't report that, a publicly traded FDIC-regulated bank, their chief risk officer and their chief audit executive left within a few days of each other, and they don't report it to anybody? Good God. And then all of a sudden the news breaks and the stock drops 50%. I mean, somebody is asleep at the wheel here. This is sleazy as all get out. Somebody really needs to look in what's going on at NYCB. This bank is a freaking mess. Although right now the stock is up 2% ahead of the opening bell, which is basically 12 cents, which doesn't really matter because this stock dropped over $5 in just the last couple of days. This thing was trading at $10.45 last Tuesday. Now it's sitting at $5.40, down over 50%. And if I might shamelessly self-promote for a second, speaking of New York Community Bank and regulators, you guys need to see this video. I put this one out last night. It's got FDIC WTF in the title. There is some really sleazy stuff going on at the FDIC, at the banks, at nonprofit organizations, at charities. Check out this video, guys. I found some really ugly stuff going on at the FDIC. It involves commercial real estate. It involves New York Community Bank. It involves government regulators and people pretending to be philanthropists so that they can stuff their own pockets. Really gross stuff is going on in New York City right now. So pardon the shameless self-promotion. Moving on, Palantir stock jumps 19% as AI demand drives revenue beat. This one, big jump over at Palantir here. Palantir shares surged more than 19% in after-hours trading on Monday after the company reported fourth-quarter earnings that beat analysts' expectations for revenue. Full-year guidance for 24 came roughly in line with Wall Street estimates. Revenue in the fourth quarter increased 20% to $608 million from $508 million a year earlier. The company reported a net income of $93.4 million, 4 cents a share. That's compared with $30 million or 1 cent a share a year ago. So things going pretty well at Palantir. And I would just mention here, Palantir is known for its defense and intelligence work with the U.S. government. They said its commercial revenue grew 70% year over year. Palantir said its U.S. commercial customer count increased 55% from 143 to 221 customers. And I couldn't help but notice Palantir and defense and intelligence work. And look, I'm sure the National Security Agency and the CIA, I'm sure they're just going to do wonderful things with Palantir and with artificial intelligence. And I'm sure everything that they do, they are going to operate within the confines of the Bill of Rights and the Constitution, which is not a document that says what we're allowed to do. It's a document that says what they are not allowed to do. And I'm sure Palantir and all of our defense and intelligence people are going to honor that commitment with their work on artificial intelligence. Right? Right, everybody? Palantir stock up 20.9% ahead of the opening bell, $20.20 for PLTR shares. Good day for Palantir. Foxconn, meanwhile, not doing so well. Foxconn reiterates guidance for Q1 revenue drop off a high base. Taiwan's Foxconn, the world's largest contract electronics maker and Apple's biggest iPhone assembler, on Monday reiterated that it expects an on-year drop in first quarter revenue coming off a high base. The first quarter is traditionally quieter than the previous one, the seasons when Taiwan's tech companies race to supply smartphones, tablets, and other electronics to major vendors such as Apple for Western markets' year-end holiday period. It noted that in the first quarter of 2023, as factories resumed normal operation following the COVID-19 pandemic, Remember all that zero COVID nonsense that was going on in late 2022 in China and how everybody was being held prisoner in Foxconn factories? Yeah, everybody forgot about that real fast, didn't they? Well, that was that when that ended, it led to an increase in shipments and a higher comparison base. They're saying the outlook for the first quarter of this year is expected to be a decrease year on year. That's what Foxconn said, reiterating previous guidance. Now, in these last two sentences here, they're kind of saying, guys, this first quarter is going to suck for us because the China reopening last year was so good and that the comparison is going to be so hard to beat. We spent all last year talking about how the China reopening was BS and how it was a big whiff. And China, yeah, they reopened to nothing. It was a dud. And now Foxconn is saying that was so good that we can't be expected to rival that. Well, that doesn't really pass the sniff test. Bad things happening for Foxconn. And pay attention, guys, because Apple just barely returned to growth in this most recent quarter. But if Foxconn is doing lousy, they build the stuff for Apple. So what does that say about demand for iPhones moving forward? Another one happening this morning, DocuSign to cut 6% of its workforce. This is another pandemic boom stock going bust. DocuSign, ticker DOCU, said Tuesday it'll reduce its workforce by 6% to support its growth. The San Francisco document services company plans to take restructuring charges of $28 to $32 million in the quarter, based on 7,336 employees disclosed in DocuSign's 2023 annual report. The job reduction will affect about 440 people. DocuSign said the majority of the job cuts are in its sales and marketing unit. So it's the best job market ever. Recall that massive 353,000 jobs beat that totally had nothing to do with a change to the methodology and the way that they count jobs, right? Well, you can add another story about hundreds of layoffs to the pile of stories that says the government labor statistics are fake. DocuSign is down 6.78% ahead of the opening bell this morning, trading at $49.60. Another data point we got was used United States total vehicle sales. All right, this one came out yesterday. This is a kind of an obscure data point. It came out, it was down for the month. That was to be expected. It was down to just under 15 million on an annualized rate. We're buying about 15 million cars a year in the United States right now. That's down from last month's figure of 16.12, but that's the end of the year. Car sales are usually pretty good in December. But what I want to mention about these car sales is look at a 5-year chart here. Actually, let's make it a 10-year chart. You can see we were humming along in the late teens, buying about 17 million cars a year as a baseline here. We had the big plunge with the pandemic, and then, of course, they gave us all stimmy money. Everybody went out and bought cars, and then the chip shortage hit. Car sales plunged again. Now, car sales have been grinding higher ever since the end of 2021 as the industry normalized, but we are still well below the pre-pandemic average because cars just became unaffordable for so many people, still not up to where we were as far as buying cars years ago. And I just want to zoom out a little bit. Let's look at a 25-year chart here. Here's the GFC. And remember the bailouts for the auto industries, which were paid back, I might add, after the industries recovered and the auto loan, the bailouts to the government at least got paid back. People who owned shares and debt from those companies got wiped out. But it took almost 7 years for car sales to normalize following the GFC. And it looks like we're moving at about the same pace here. The slope of this line up here is about the same as what it was after the GFC. It didn't fall as far this time. So I thought that was interesting because we subsidized the hell out of the car industry. Remember the bailouts? Remember cash for clunkers? Remember all the government programs? Well, we're basically doing the same thing now with EVs, with the CHIPS Act and the Inflation Reduction Act, and it's having a similar effect. So I just thought that was interesting. And the last story I want to talk about here, guys, shout out to Wavy McFly on Twitter, who sent this one yesterday. He tagged myself, Samantha Leduc, Kakashi, Dario, Finance Lancelot, all the guys who have been covering the round tripping and some of the shenanigans at NVIDIA. And he posted, "You've all been vindicated." Financial Times article called Sell NVIDIA, talking about the shenanigans that NVIDIA has been engaged in to juice their earnings. This is all based on a note from Barclays. And I just want to bring this one up. I will have more to say about this one in the future, guys, but check out this one here from the Financial Times. Sell NVIDIA, sanctions risk, Self-funded demand. Gee, does that sound familiar? Anybody who's been following this channel? Self-funded demand. Customers becoming competitors. Just don't tell the shareholders. This is based on an analyst note from Barclays. Finally, somebody in the mainstream financial press, somebody on the analyst side is looking and realizing, hey guys, NVIDIA is giving billions of dollars to their customers, calling it investments, and their customers are just handing it back to them, and it's making their growth look bigger than it really is. Yes, the GPUs are awesome. Yes, artificial intelligence will do wonderful things, provided we don't use it to kill each other and spy on ourselves. But other than that, NVIDIA is faking a lot of this revenue growth by making it look bigger than it really is to inflate their stock price. Finally, somebody's talking about it. You even had Dan Nathan on CNBC saying it yesterday during their options hour or whatever they do over on CNBC. They're all talking about it like it was their idea. All right. These are the same people who for 6 months ignored this story. And I know they all saw it. 6 months, they ignored the story. Some of them laughed at it. One by one, they're going to start talking about it now. We'll see if they remember where it came from. Anyways, I'll have more to say about this one in the future, guys, later today. But figured I had to at least address that one. Thanks again to Mr. Wavy McFly for the shout out on Twitter and for bringing that to my attention yesterday. And I just want to say also thank you very much to Travis K, who says happy belated birthday to J Pal. Well, happy birthday, Jerome Pal. Says here, Jack, to buy him something nice. This ought to cover the cost of a napkin and a straw at McDonald's. All right, J Pal, gift wrapped napkin and straw coming your way, courtesy of Mr. Travis K. Travis, what am I going to do with all the leftovers? I mean, after there's some money left over, maybe I'll give it all to charity, maybe even a real charity. I can tell you one charity I won't be giving it to. I definitely won't be giving it to the Community Preservation Corporation. All right. I definitely won't be giving it to that charity. And if you wonder why, check out that video I did yesterday that's got FDIC WTF in the thumbnail. That's why I won't be giving that money to the Community Preservation Corporation. But thank you, sir, for the super chat, the generosity, the support of the channel. I appreciate that. And thank you to Hector Acevedo. He says, breaking news, another day of layoffs, and NVIDIA is up today. More layoffs, NVIDIA up. That's what NVIDIA does. Interestingly enough, Barclays, the company who released that note that said sell NVIDIA, they reiterated their price target for NVIDIA on the same day. So even when these guys actually look and when they say sell NVIDIA, they're still telling you to buy out of the other side of their mouth. Am I surprised? No. I can tell you there is a reckoning coming for that stock, and there's going to be a lot of arrogant a-holes out there who ran their mouths. People with very expensive buy my newsletter membership who have been bashing this story. And, well, I don't think they'll ever admit they were wrong if it comes to it. They'll probably act like they were right all along, even though they know they weren't. And you guys, you know who you are that are out there that were doing that. But they're all going to act like it was their idea. After laughing at it, mocking it, and ignoring it, they're all going to say, I called it. They're all going to say it was their idea. You guys know who really called it, all right? It was Samantha. It was me. It was Kakashi. It was, oh, my goodness. I'm drawing a blank. Dario, Finance Lancelot. Who was the other guy? Dang it. There's so many guys. I'm sorry. I'm drawing a blank. But there was a couple of people who were working on that story. They all got a ration of shit from all over Twitter and FinTwit about it. But all the people that were bad-mouthing us and mocking us, they'll all act like, oh, yeah, I called it. And if you subscribe to my ridiculously overpriced newsletter, you would have known about this. No. Anyway, thank you, Hector. I appreciate the super chat, sir, and the support of the channel. And thank you to the Brojo Show, who says U.S. Treasury heads to China, to talk sovereign debt and econ policy. Is Yellen, is she packing up her best pantsuit and heading over to Beijing? Has she got a meeting? Is that the big meeting that China has? Is Janet going to be there? Is Aunt Janet getting together with Uncle Xi? Or is it Uncle Ping? A family name comes first. Uncle Jin? I don't know how we would say that. Anyways, well, again, now that I know Secretary Yellen is getting in there or the Treasury people are getting in there, it's definitely going to be good for us, whatever comes out of that meeting. Right, bro, Joe? Good God. Thank you, sir, for the super chat and for the support of the channel. And thank you to Vegas Schmitty. Browsing for Super Bowl tickets, lowest at $6,300. Oh, my God. For a Super Bowl ticket, $6,300? Guess what? First payment option is BNPL. Thank you, Affirm. Feel free to securitized BNPL loans against Super Bowl tickets and sell that right into our pensions. That's going to go just great. For Super Bowl tickets, wow, we are in big trouble. Guys, never underestimate this market's ability to give people enough rope to hang themselves financially. And that's what BNPL is. It is this new method that we have given to people so that they can enslave themselves via debt. And ironically, the people that are lending the money, they know it's never going to get paid back. They don't care because they're not taking the risk. They're lending somebody else's money. It's the middle class who's ultimately paying for it. You've got people at the very bottom who are buying stuff with no intention of ever paying it back. They're getting the free stuff. And then you've got the rich people at a firm and at the banks that are securitizing the stuff and all the financial advisors that are steering your money into this crap. They're all collecting fees. They're getting rich off of it. And the people who are suffering are the middle-class retirees who are going to pay for this either through inflation or through their retirements going down or through higher taxes that are going to be needed to bail out all these sleazebags who every time they act like they're so smart and they're so great. And then when they screw up, it's on a monumental level and they're like, well, it's all on you guys to fix my mistakes. That is our financial system to a T. Thank you, Vegas Schmitty, sir, for the super chat, the support of the channel. And thank you very much to the inflation situation. It says NFL is tax exempt. Well, yeah, all those woman abusers and guys who get, shoot up clubs and everything. They need tax breaks, don't they? Auditor is Deloitte. Think about that nonprofit status. Don't get me started on these charities, man. Again, and all joking about the NFL aside, check out that video about the FDIC, guys, and what's going on with that charity in New York City and how they're paying themselves and what their history is, what they've done in the past. And then ask yourself, does affordable housing ever show up? All these people whose job it is to guarantee affordable housing, does housing ever get more affordable? Nope, but they always get richer, don't they? Interesting. Thank you to the inflation situation. Thank you, everybody, for the super chats this morning and for having your coffee with the melon heads. Appreciate you guys very much. Thank you to my Patreon supporters for everything you guys do for the channel. I got links down below to all that good stuff here. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.